want to welcome in David Stryzewski, CEO of Sound Planning Group. David, thank you so much for joining us today. All right, let's talk a little bit about where things stand, right? Although, look, we're seeing a little bit of a pullback today, but we can't ignore the records that we have seen. What's your outlook for the second half of the year?
You know, I like the setup that we've got for the second half of the year, as we've got the big, beautiful bill that's just come out. I like to call that the Tax Cuts and Jobs Act 2.0. Just a couple variations on that could help average families and really boost some things. But I'll be honest with you, when I start seeing things looking too good, I start to suspect that there might be something challenging that comes. There's just a lot of challenges that could be showing up in some weird ways.
I like that you said that, because I was at an event yesterday, CMT event, and there were a lot of Wall Street guys there at the event, and you know, there were a lot of charts that they had about the setup for the second half of the year, and they were largely bullish. And the question was, what's the risk on the horizon? What do you worry about?
You know, I'd say the thing that I worry about right now is the fact that we just had a labor number come out that says that unemployment, or those that are filing unemployment, 30-month high. So in the last 30 months, we're at a high place. That's typically the last thing to go before the economy really starts having challenges, is labor. I think that we're looking at the 10-year right now having some challenges, and I think it's probable that it goes up to 5% because we're at 37 trillion now that we've crossed that threshold. So I'm concerned about the same things that we've always been concerned about, and we're just sort of trying to figure out how to right-size the ship, how to not overspend, how to get our nation back on track, how to build back here. But now we've got tariff conversations and some things that could be really disruptive. So
I'm glad you brought that up, because it feels like, you know, I'm curious to know your thoughts on tariff risk. It feels like it's kind of gone to the back burner, and because it's not as shocking as, you know, the beginning of April when we first heard about the tariffs and the level, the draconian level that was imposed. But there are still some high levels of tariffs, and even the news about Canada with the Trump administration imposing a higher tariff on Canada, that feels intense, but it seems like the market doesn't reflect that.
You know, the whole conversation with tariffs, this is an interesting time. We've not really seen this play out in the modern age. Clearly, there is disruptions that happen at any point in time. I don't know what's going on in those negotiations or what the right answer should ultimately be. But here's what I do know. I do know that that the world is changing right now as it relates to its trade policy. Where we had free trade and so much peace, it's obviously we got a lot more of a challenge right now, and there's not as much peace. We got the BRICS nations that have been buying gold and whatnot at a record rates as opposed to buying our Treasury. Why? Because no one wants a future IOU on the U.S. dollar when we printed, you know, a new $1 trillion every 100 days, or that was at least the trend last year. And so I think that the world is kind of like not in great shape with the U.S. dollar being the leader. If I can just be honest, I'll quote the Chinese Minister of Finance in August of 23. He said it cost 17 cents for the United States to print this $100 bill, and it cost us $100 in wholesale goods to get it. And he was exactly right. It's not exactly a great deal for everyone else in the world, but it is our world's reserve strength and power, and so it's really important that we keep it. That's why I think stablecoin legislation is so important, and why the Genius Act next week is such a big deal.
That's going to be a big focus next week. I mean, you have, and you know, there's a lot of focus on crypto right now. I mean, you have Bitcoin achieving a new record. We're talking about records in equities, but Bitcoin, even with risk-off sentiment in equities today, you're seeing risk-on when it comes to crypto.
Absolutely. Hey, I'm an excited person to be here as Bitcoin hits a new record high. I have been a Bitcoin investor for a number of years. I was buying back when it was speculation. Now there's real allocation that's occurring. MicroStrategy set a precedent for companies and how they're looking at their treasury. What are they going to allocate in? The U.S. dollar that's already dropped 11% this year? Or they're going to look at all their alternatives that are not necessarily currency, but they're a stable hold on something. They might reflect if inflation's going on. And so, yeah, Bitcoin, I think, is going to do exceptionally well. I think blockchain technology is going to be a really important thing as we look at the future, because we need supply-side economics in order to bring costs down. Now, that's going to cost us some jobs, but it's also going to change how the world works. The next 3 to 5 years absolutely is AI's world.
I believe that, yeah.
We're just going to see a second version of it come out, and then it needs to be kept very safe, I think, in a blockchain type of a setting, because all of our information is
out there.
Is out there.
So exposed. That's why cybersecurity is so necessary. Let's talk a little bit. I want to get a brief thought from you on the Fed. You say the Fed's best weapon is interest rates.
That's right.
And you liken it to them holding a bullet right now. Why do you think that is?
Okay, so the Fed's biggest move that they can make right now is dropping those rates. For every 1% that rates went up, it costs 10% more to service that debt. Or you can borrow 10% less, okay? So however you want to look at it.
Right.
The point is that the Fed right now is waiting for something to break. They're not going to just drop rates as we hit record highs yesterday in the stock market. You got to wait for things to get really nasty and bad. So I think that there's challenges amongst the banking industry because we sit at opposite sides of the table. They locked in on long-dated treasuries. We thought inflation was transitory. The 10-year was yielding less than 1%, and of course they gave 50% of Americans a refi on their mortgage, and so 3% mortgages are way lower than what real inflation is today.
I want to go back to I know you're constructive, obviously, on crypto, in particular Bitcoin, but where else do you see opportunity?
I'm really bullish on a lot of things right now. I'm really bullish on metals. You can't do semiconductors unless you've got silver. Silver today broke $38. I am a significant silver investor because I believe that silver is the most undervalued commodity in the entire world. Now, in my portfolio of silver, I've made about 30% this year. On my GDXJ, these are just metal miners and producers. Those are up about 50%, and so they're far higher in the appreciation. There's a number of different ways to run it, but I think that metal miners have not really even been a part of the 60/40 portfolio. So let's look at that and say, hey, the entire silver market is literally only $30 billion. That's way too small, and so it is the commercial connector of chips. We can't do Bitcoin. We can't do semiconductors. We can't even do missiles without silver. So it's how we electrify the world in the future.
All right. Thank you, David.
Hey, pleasure's mine.
Appreciate you being here. That's David Stryzewski, CEO of Sound Planning Group.